Good morning, everyone, and welcome to today's BAFT educational webinar, The Current State of Correspondent Banking and Trade Finance in Latin America and the Caribbean. We are thrilled to have over 200 participants joining us today from 22 countries around the world, from India and Germany to Brazil, El Salvador, Mexico, and beyond. Thank you for being with us. Today's session brings together a distinguished panel of experts who will explore how institutions across the region are reshaping partnerships, managing portfolio risk, and innovating through ESG strategies, automation, and trade solutions. Please, throughout the webinar, post your questions in the Q&A chat. Let me introduce our panelists. We have with us today Jean-Paul Anteno, Managing Director, Head of Trade Finance for Latin America at Bank of America, Amy Rees, Head of Global Transaction Banking, Global Trade and Supply Chain Finance at Fifth Third Bank, Nestor Mosquera Moreno, Executive Director, Head of Trade Finance Latin America at Sumitomo Mitsui Banking Corporation, and guiding today's conversation, we are pleased to have John Rodriguez, General Manager at BICSA, serving as our moderator. With that, John, the floor is yours.
Thank you, Belkis. And happy to say that this outreach to the Latin American Caribbean region, especially focusing on the topics of correspondent banking and trade finance, is brought to you by actually active members of BAFT. And the cross segment that we have today are basically from a regional bank, a national bank that has global reach in terms of their trade finance business, as well as a global bank. And the reason the scope of this is because this outreach is meant to do two things. First of all, the concept of how we do business in the region, we want to identify the fact that most of the U.S. banks and correspondent banking, they still are the main lenders in the region. And the way that I can reference, by the way, more information on this is the fact that BAFT has what we call a respondent's playbook to help respondents work with their correspondents in terms of what the managing expectations aspect of the business is. Secondly, in the way that we've evolved in trade finance, the BAFT Master Risk Participation Agreement allows banks to have a framework where they can have a network of being able to support trade finance transactions in the industry. And lastly, a deep dive in correspondent banking. We can discuss this topic today, and it would take us a full hour, but we do want to reference the future leaders of BAFT that basically have put down a paper, a white paper. In fact, it was launched as of 2 weeks ago, called the Correspondent Banking Operating Models, Analysis, and Efficiency and Profitability. So the scope of this is that if you look at before the Patriot Act 9/11, banks used to originate transactions mainly through what we call funding limits. They were called usual foreign departmental transactions, which under credit limits offered by banks, it was part of the correspondent banking offering, and they would actually have payments and clearing as part of the overall aspect of the business. Well, that changed quite a bit because banks used to originate transactions and they would look to see where the exporter or the beneficiary of the import would be, and they would send that transaction to their bank. After the Patriot Act and after we started developing trade-based AML, that concept has changed significantly. And part of the reason is banks had to implement controls, especially around anti-money laundering, where they would have to look at the transaction, look at the beneficiary, the applicant parties in these transactions, do due diligence on these transactions more effectively, and apply trade-based AML best practices. So most of the business went more focused on transactions. And what that means is you would look at the export, you would look at the way that the actual transaction was structured, where there was a letter of credit or if it was just a trade advance. And eventually what ended up happening is we've seen trends where a lot of the business went more into open accounts. So what I want to point out to you today is that banks had to really understand that in order to maintain active relationships with their bank correspondent or respondents, they had to maintain what we call live RMAs, relationship management accounts, which are SWIFT type accounts. Unfortunately, a lot of that was lost. And we know the topic of de-risking was a comment that is made quite often, but I do want to point out this. It was a lot of decosting, meaning if the business and the volumes weren't there, it was very difficult for institutions to justify those relationships. So a lot of the business went to specialized trade groups, trade functions within the major banks, and those banks that were specialized in this trade business ended up expanding more into supply chain and other types of solutions. So what I want to start off with is our first question, an audience survey question on correspondent banking. Catherine, could you please share that question with the audience and get their input? If you would respond, it would be great to see how you define. What are the challenges that your bank has faced maintaining corresponding banking relationships? Has it been de-risking by global banks? Has it been the high compliance and KYC costs, the low transaction volumes, currency volatility, or no major challenges? I'll give you just 1 second here.
Go ahead, John.
Okay, so thank you. So we want to point out that as we see here, de-risking and the KYC aspect of this is where you find the biggest challenge. However, the low volume leads to this question of reciprocity. Latin America is a credit market. Similar to some of our councils throughout the world that BAFT has and enjoys, we have councils that represent the support of the region, especially for trade. We find that similar to Sub-Asia, which is one of the markets that requires credit support, especially in the trade side, so is Latin America, which means that in order to maintain an active relationship with a bank in Latin America, you must have the ability to provide trade financing. Whether that's done through a funding limit or done through specialized transactional type credit support for trade finance, those are two aspects that you have to consider. So I want to go into this question from the standpoint of you need to be in the same framework of what's required to maintain these relationships. And BAFT is an awesome organization. I just point that out only from the fact that the main banks that are providing trade financing and providing correspondent bank lending, BAFT has all the main players as members. And that's not only global banks, US banks, but also regional banks, which are, we're going to discuss some of those topics today. So let's go on to the next question, if I may, Catherine. For the audience, and then we'll have Emmy opine on her experience on this. So Emmy, if you don't mind reacting to the responses from the audience, I'd appreciate it.
Of course.
So the question is, what is the primary purpose of your correspondent banking relationships? Cross-border payments and remittances, trade finance, foreign exchange services, access to international financial markets, or compliance and regulatory support? So I will share the results here. It seems that trade finance and letters of credit tends to be the main purpose of maintaining correspondent banking. So, you know, our perception of this was correct. It tends to be still the driver, trade finance and expansion. So can you opine on this, and how do you see, for example, Emmy expanding into the region, and how do you see second and third tier banks that have more of a challenge maybe getting relationships? You know, is the business focused more on transaction type deals, or what is your opinion? What forms of reciprocity can you get, maybe even working with such institutions?
So I think from my perspective, the first thing we need to do is shift the mindset. I think we're very used to, asking, well, how many payments are you processing? We're very transactional. We've been very transactional for a really long time. And I think for it to have reciprocity, we need to ask questions like, what else are you doing that, we can add value to? When you're talking about cash management, talk about it as a liquidity solution, long-term solution, FX services, talk about it and specialization in the market. That Latin America and the Caribbean has a lot of, what major differentiators, do you have? I think a lot of the smaller banks have found ways to rebuild their relationships with other regionals, with other second tier correspondents. and they're just offering, strategic value, like market expertise. And they're even going to the point of talking about strong compliance frameworks, because all that is intertwined in what we do in trade finance. We're seeing a lot of, banks repositioning themselves as, one of the lead providers in their space. Banks like Fifth Third Bank are looking for, tier one, tier two, even tier three banks that are systematically important in the region, that would allow us to have a foot in the region without having our own representation there. And then vice versa, those banks are coming to banks like us in the US, or let's say we have a stronghold in the Midwest, and they're saying, hey, can you be my go-to bank in the Midwest, even though they have other relationships with larger organizations. And that's how the reciprocity is coming into play. So I think we have to go, change from being a processor to being more of a strategic partner. And that way both sides go beyond fees and it becomes more of a truly profitable and sustainable relationship.
Excellent. So it's not just cash management, reciprocity, it's really that partnership, and that's important. And this is one of the drivers that we think that being in the same network of the major lenders helps really to address, these topics, right? And be in the same meeting room, if you will, as to what the expectations are to develop these relationships. So BAFT is definitely an excellent network for that. So John Paul Antello, quick question for you along this line. I mean, Latin America and the Caribbean remains a focus of opportunity, as was mentioned earlier, not only following clients of our banks that deal with the region, but what is the focus on the financial institution side, corporates and fintechs? It seems that the market is getting a lot of attention, and certainly our BAFT members are looking more to expand into the region, and we hope to see more and more meetings down the road where we can be in the same room discussing these particular opportunities.
Thank you, John. And I really like the way that Emmy posted and said a shift of mindset, because we've always thought about Latin America on the de-risking side of the table. But what if we change that concept and we make it more strategically imperative and we think about re-risking? Because Latin America has been growing. Latin America has been posting very much a strong evolution of positive developments on regulatory, digital transformation, playing a really larger role in global trade, such as nearshoring, friendshoring. So global banks, I think, are selectively returning into the region. Now, we obviously have to continue to be mindful of trust, transparency, that technology will remain central to sustaining and scaling up those correspondent banking relationships. When you look at broadly, for us, LATAM, it is really, it is in a pivotal moment, because you see them transforming in finance, you see them transforming in payment, supply chains, AI, fintech innovation, to your point. 33 countries in Latin America. It is a $6.7 trillion economy between the combined LATAM and the Caribbean. 70 free trade agreements. So when you look at from a scale perspective, a large growing market, 700 million population. For multinationals, expanding operations in emerging cities just to really enhance logistics, technology, outsourcing, it's a must. So we have a growing tech ecosystem, right? You see Sao Paulo, you see Mexico City, you see Buenos Aires coming back, becoming more and more attractive investment scenario, and obviously centers of fostering innovation excellence among global players. So for us, and I think the market sees Latin America experiencing rapid transformation all across the angles of growth.
Thank you, Jean-Paul. I agree with you. And one of the things that I find quite interesting is how the ecosystem and supporting solutions has expanded. We see global banks, US mega banks, not only are they looking, for the economies of scale, for those that do enjoy the larger corresponding bank relationships are working with the larger banks, but we also see the global banks focusing on trade, the regional reach, as you said, yet selectively in some cases. But we find that multilateral agencies through the trade facilitation, trade finance programs, AB loan programs tend to work. But we also see the export credit ECAs, the agencies looking into the abilities here in the U.S. Certainly, Exim Bank. A lot of banks work with Exim Bank and works with respondents such as my institution to look at opportunities around participations. Also, the ability for cross-border type underwriting. But my question is, we also see credit risk insurance. We see other ways of mitigating certain risks. And so I want to ask this question, really not as a commentary, but to Nestor, as to what is the shift that you've seen, Nestor, in the industry to specialized units at banks that originate trade finance versus that traditional correspondent banking that Emmy was demystifying and being more focused on a partnership approach. And the other question is, what key solutions do you find in trade finance origination and distribution in the LAC region?
Yep. Thank you, John. Well, what I would say is I'd like to reinforce what Emmy said, what John Paul just said. I think that the evolution in the system is going towards a partnership rather than us selling over-the-counter products. It's more a partnership. It's a deeper conversation in understanding what are the markets and the client's needs. That's very, very important. So you can start to customize the solutions. So I think that is a positive part. On the other hand, the other aspect that we're seeing is in the past, many of the banks had created separated teams, one to cover the FI portfolio, the other one to cover the corporates in Latin America and in other regions in general. But we're seeing that the closeness between those teams is possible, and that creates synergies and solutions that will take the system to a different level, right? So for instance, I mean, if you think about the way that the economy in Latin America behaves, I mean, we are a $1 trillion economy in exports. The majority of the flows that we export, probably 60 or 70% of that, are commodities, because we are perhaps the pantry for the world in a lot of commodities, soft commodities, metals, minerals, oil and gas. All of that is what comes from the region. And the market is very global. And so we need to be able to leverage in local capabilities, the local network that banks in Latin America have with the clients, the outreach of the global banks in terms of network and footprint. And one thing that we all need to remember is that the majority of all these global mega banks that you refer to started in trade.
Yes.
The origin of most of these banks comes from trade. So it is embedded in our bloodstream, in our culture. So I think that developing the partnership between the local banks and the international banks, it doesn't have to be necessarily global banks, is very important. Because, for instance, you see that banks in Latin America are starting to expand within the region. So they're going together with their clients. Their clients are starting to expand in other countries in Latin America, or sometimes into the US or European markets, which are much closer and relative culturally similar. So that expansion creates a need and an opportunity to learn. And the learning perhaps could be brought from banks that already have that experience. And sharing those experiences is what it is very, very important in that sense. So one critical example that I have thought about for some time that we have shared before is when you look at supply chain finance programs, if you have a buyer in the US, a good portion of the suppliers will be based in Latin America. So how do we connect those buyers and suppliers together under a single platform? I believe that global banks need to be closer to local banks to be able to capture those flows that are very important for the clients in developed markets, but are also very, very important for clients in Latin America as well. So that
would complete the supply chain financing, as you said, more captive. So my question to you is, are you seeing asset managers, trade finance companies filling the gap in some ways? Because it seems that, Latin America as a hemispheric region, it's so important to the U.S. exports and imports as well into the supply chain. So are you seeing a lot of these companies sort of filling the gap?
Yes, and I mean, the world is now very global. So you see a lot of new incumbents into the ecosystem getting there. There's fintech companies, there's platforms companies, there's asset managers, and asset managers find in trade finance a pool of assets that will help them to diversify the risk on their portfolios. Because normally the perception, and is the reality, is trade finance assets could be short-term, could be revolving, could be with perhaps sometimes a lower risk. Because in the end, what you're financing is the core for the companies to operate, to keep moving. So that creates an opportunity. And yes, asset managers are there. Of course, everyone will have a different perception of the risk appetite that they will have. But I would say that because Latin America is very diverse, sometimes the asset managers are there, but you would need players to aggregate them and connect them to the market. So the same way that we have the correspondent banking with local banks working with a group of global banks, we also need the global banks to step in and aggregate the asset managers and start to connect those, because there will be opportunities.
Great point. And that concept that Jean-Paul mentioned earlier about re-risking, I think that adds a little bit of what we're going into, and that is we're not necessarily abandoning the old traditional correspondent bank funding limits, but we're going more specialized, we're going wider, we're dealing with wider supply chain solutions. So there's been an evolution also in what we'll call the ecosystem, right? So I do believe, for example, the supply chain financing, factoring, risk participation, as I mentioned earlier, credit risk insurance, innovative portfolio management strategies, right? For, also the ECA and the multilateral AB loans, as I mentioned. So I want to ask Emmy, so can you elaborate the importance of each of these elements to help mitigate risk? And by the way, I would like to also just interject real quick to the audience that we do have a Q&A segment here. Some are actually posting on the chat, but if you have the Q&A, I would love to maybe use some of your comments to interject here with the team and maybe give you some more immediate feedback. So if you can have questions, we'll try to make it a little bit more interactive. But I think this particular question now evolves into what we are now working with, right? Which is an ecosystem of all kinds of players, including credit risk insurance companies that help us also re-risk or risk mitigate the risk. So that we can work effectively in the region. So Emmy, tell me about your experience on this, and what is your perspective from an industry standpoint? How do you view this growing, if at all?
So first of all, I'll say that access in Latin America and the Caribbean is not necessarily always equal, right? You have a lot of the smaller banks, tier 2, tier 3, facing, risk, regulatory hurdles, infrastructural gaps. And I think having all of these solutions really becomes an important strategy so that they can manage those challenges. And as Jean-Paul mentioned, now that we have a rise in nearshoring and reshoring, the Latin American Caribbean region is really stepping into like an amazing era. And the reason being is that a lot of these global companies are bringing back, supply chains home, right? Either home or they're bringing them closer to home. And I think the Latin American Caribbean region is becoming very, very attractive as a strategic trade and manufacturing hub for a number of reasons, right? And I think this shift is bringing a fresh perspective to financing, doing things via digital solutions, becoming more agile. And to your comment, John, kind of like reframing the trade ecosystem, right? So I think we all know supply chain, factoring. I mean, it is like the lifeline to these suppliers, right? Whether suppliers are in the U.S. or anywhere in the world, it's very important because we're getting, access to cash, and then they're allowing, the buyers to regroup, to breathe, for lack of a better comment, right? Then you have risk participation, credit risk insurance. I view them as safety nets. I think that they help us manage exposures, and they protect against defaults, which is what they'll do to banks in the Latin American and Caribbean region. And, you mentioned it earlier, and I'll reiterate it. I think portfolio strategies as it relates to ECA guarantees, A and B loans, structures, trade facilitation programs. I think those are all ways to partner, reduce risk, and, have the ability for banks to unlock, capital for the banks in the region and globally, right? So to me, all of these become a super powerful, I'm calling them a toolkit, right? To help banks across the region unlock these new opportunities in trade. Again, it's not just about transactions, not just about processing. It's about how do you build resilience? How do you drive sustainability, growth across borders? And to me, I think it's an exciting time for the region. And I think we're just getting started, and it's just going to get better.
Perfect. So let's add a notice audience question here again, since we're demystifying, the aspect of the shift, on trade finance going more in a certainly wider role. So Catherine, can you share the next question, please, with the audience? So how do you see the future corresponding banking corridors in Latin America? Do you see it as expanding the digital innovation, stable, but under pressure, shrinking due to global de-risking, uncertain and volatile, and not strategic focus for us? So Emmy, if you can continue on the reaction on this, let's see what the results are, and I'll share that with you.
Thank you.
Okay, so expanding with digital innovation. So stable, but under pressure. So, but again, by far, we saw the biggest response here is expanding with innovation. So tell us more about that. Briefly elaborate on these tools and what's available in digitization, and what strategies can you share with us today, Emmy?
So I think across the board, and you're going to hear a common theme, it's AI, it's blockchain, it's the TFAS, or the Trade Finance as a Service platform. I mean, all these things are actually expanding and allowing us to expand. It's cutting down paperwork, it's speeding up transactions, it's making risk assessment easier. So it was funny, and I was in a discussion the other day, and somebody made the comment about snail mail. And I think, if you have Gen Zs or whatnot, like I do, you go from snail mail and now to instant message. And I think that's, what's actually, happening, right? It's not going to be easy to get to where we need to be. There's a lot of barriers. A lot of countries still require papers. A lot of banks still require paper. I mean, trade is a very paper-driven industry. We want to hold on to the paper. We think, oh my God, this is the only way that things are going to work. And unfortunately, that's really not the case. I think that, the world is evolving. I think we have to evolve as an industry. So I think the momentum is strong. And now we have new regulations on electronic trade with the Electronic Trade Documents Act. And I think, the industry is being pushed toward more digital, transparent, like Nestor mentioned earlier, to have a sustainable future. And I am going to give a plug to BAFT, because I don't view BAFT as a trade association. I've been working with BAFT for 100 million years. I think they're a global connector. They bring banks, fintechs, regulators, industry leaders, to shape the future of transaction banking. And I think in the Latin American Caribbean region, this means that, there's access to best global practices, advocacy on key regulatory issues, and more importantly, you get a seat at the table. As the future of trade changes, you get the opportunity to have a voice. So I think it's a door opener, and to me, it's an essential part of transaction banking as a whole.
And it's a great point. I mean, you're a lender, you're focusing on the region. You would love to have the respondents there with you. You'd love to have those meetings. You'd love to have those discussions, and certainly expand the BAFT reach, right? Certainly on the training on future leaders, as you mentioned, and certainly the ability for us to manage expectations around this business. So I will add that, Jean-Paul, you might have some insights on the technology and networking trends that you're seeing, particularly with respondents, right, with banks in the region, and tell us a little more how you feel about this in the trade sector.
Yes, definitely. I think that shift to the digital payments, the whole innovation, digitalization, and again, has the component also of financial inclusion, so that we have to bear in mind. And I was telling you, there's 700 million population in that time in the Caribbean. There's approximately 26% of the population remains unbanked. That 26%, it is roughly 180 million people that the majority of those people are owners of SMEs. When you talk about supply chain finances, how do you get scale? How do you get to that scale and support banking beyond bank by providing access to credit? So it is really a big component about how do we responsibly drive technology through innovation and digitalization. And we've been seeing great cases, John and team across the region. When you're looking into Brazil, for example, mobile wallets, fintech platforms, real-time payments, PIX, Mexico, across Cody and Spain. It is amazing the scale and the rapid acceleration that our countries have posted in order to really foster this innovation and financial inclusion. Because just in 2024, PIX roughly processed 64 billion real-time transactions, 64 billion. So mobile adoption across our region is very, very high. 77% of consumers are using mobile banking apps. So it's really a motivation on how do we really accelerate that responsible growth through innovation and digitalization, but also looking at that component of how do we scale it up. And when you look at scaling it up, that's where AI now will help us contribute to a better environment with less risk, a bit more compliance, a bit more visibility, a bit more of transparency. Because today, when you look at LATAM from an AI perspective, there's 4 components of AI. You talk about AI for data gathering, which most of us and the whole population have been doing, extracting, validating data. We talk about data. Global banks have a lot of data, and we can really use that and participate that data in order to anticipate risk management activities for us and for our clients. Also, there is AI for analytical tasks. How do we use that machine learning in order to analyze, identify patterns, really anticipate supply chain shocks? But now we're moving beyond that, and we talk about generative AI, which is all about content, images, and the next generation will be cognitive. So all these 4 items within AI will be a true differentiator when we're talking about how do we continue to foster growth through innovation and digitalization across Latin America. And also when we are thinking about democratizing the payment system, democratizing supply chain, taking that leverage into the nearshoring, reshoring, friendshoring, that we are always talking about, on how good LATAM is positioned to really contribute to the world growth by this type of rails of trade.
And thank you, Joe Paul. And I wanted to ask Nestor just chime in on the financial inclusion aspect of this. I know we've chatted about this earlier, but Nestor, and then I'd like to maybe just participate with a quick question that was sent by the audience and see who would like to take it, but very interesting question. So Nestor, please proceed. How's financial inclusion work in this?
Well, I think that financial inclusion is something that is very, very critical for Latin America. There are several countries, as Jean Paul mentioned. Brazil are leading this initiative in the market, in the region, Mexico as well, but the rest of the countries are also doing their part. And the key thing is, with the spirit of the governments to reduce informality in the economies, they launched several tools and facilitation for clients and for companies to start getting more into accessing financial products and financial solutions. I see two main things that are very, very important. Number one is, one of the main reasons why we didn't have a high financial inclusion was because people didn't really understand the financial products. And I think that we as bankers have a moral responsibility to make sure that our clients, whether we cover individual banking or company, enterprise or corporate banking, we need to make sure that our clients understand the products that they're buying, the benefits that they would get from the products. And then that's going to be able to help in the development of the inclusion. I mean, the other thing that is very important is the gender gaps that we see. Inclusion has increased. There's a bigger number of population in Latin America having a checking account nowadays, or a savings account. But when you look in detail to that statistic, you will find that women do not have that many accounts compared to men. So there has to be an initiative, there has to be an effort to be able to expand and develop that banking business within the women's, because that is a very important part of the economy as well, and that is part of the inclusion. The word is inclusion, so we need to be inclusive in that sense.
Yeah, and we've seen some of the multilateral agencies adding some support in that aspect with some programs. The next session here that I want to say, Nestor, is that we were going to delve into a little bit of the wholesale funding for banks and as a topic, but one quick key question that came in, I think applies well, and that is, how do banks, in the mindset of internal credit risk groups, how do you share the knowledge to support transactions in the region? And I think that's always a challenge, cross-border risk, right? If you can just share, it was an anonymous attendee, but if someone can chime in on this as we lead to the question, and it leads right into this, Nestor, if you can continue here real quick before we go to Jean-Paul, is how can we strengthen more of our roles to be able to do business in Latin America and also work with supply chains?
Well, I would say that, the supply chain finance business in Latin America, it's very important. It's about $200 billion of factoring business that gets printed in Latin America. Mexico is one of the biggest countries, Brazil as well, Chile as well follows on to that. So I believe that the market is there. I think that it is pretty much concentrated in the domestic flows. So it's companies within the same country setting. There is a shift towards international factoring. So probably nowadays, less than 10% of the global factoring flows in Latin America are geared towards international markets. But that is international markets in the sense of the nearby countries. So if you look at a country like Guatemala, they export a lot into El Salvador, into Nicaragua, into Mexico, into Costa Rica. So very, very close by markets, right? And you would see that within your organization, John. But I think that the biggest potential as well is on the rest of the world. I mean, the economy, if you look into detail, the statistics of exports in Latin America, the majority of the markets go to the US, go to Europe, go to Asia, Japan, China. So how do you connect, again, as we discussed before, how do you connect the global banks with the local banks to better promote business in there is very, very important. Because the global banks have the relationship with the buyers, the local banks have the relationship with the exporters. And sorry to be repetitive, but I think that is a very, very important premise of all this situation. In a global economy, that is what happens. So you need to identify those actors and connect them through programs. Because what I think in a very, very quick aspect is, if we have a program where we can add too many more suppliers, for a global bank, that is a win situation, because we can increase the volumes, we can generate more power, more relationship with our buyers. But then at the same time, by connecting with suppliers in countries in Latin America and somewhere else as well, as we have a global audience today, and Africa is a very important part of the world in terms of supply of soft commodities as well. How we connect those and how we make those partnerships beyond the traditional correspondent banking business that we have seen for many decades. And I believe that is one of the main aspects of it.
And we want to hear Jean-Paul on this particular topic, because in this session, we are talking about LSE's role in the global supply chains. But I want to interject with a question, which I rather point to Emmy's point about the fact that it's partnerships. And the question really here is from Anna in our audience, who basically said, look, we, as a smaller bank, it's tough for us sometimes to be able to be part of this trade finance solution because our volume isn't big. So Emmy, before we address the supply chain aspect, how do smaller banks play a role in the supply chain, and how does that partnership approach maybe work to where maybe they can add some value more not because of their volume, but because of their ability to reach certain sectors? Would that be a fair question?
Of course. So I think in the same way that we, as we started our supply chain business many, many years ago, the idea is to partner with, in some cases, regional banks in the US or even global, banks in the US, where particularly for regionals, I'll speak to that, is, there are many times that we're not in a position to buy receivables from Latin America, or the credit insurance is going to make the transaction cost prohibitive. So partnering, and this is where I go back to my, shifting the mindset, and truly creating a partnership. If you have a partnership with systematically important banks in these regions, you're going to reach out to them and say, hey, do you have, ABC customer in your client base? Is this an important customer to you? Or is this a top prospect to you? We're in a position to sell these, buy these receivables from one of our very strong domestic customers, but we're not able to do so, or we're not able to do so in the local currency because they prefer it. And then partnering with them so that they can go ahead and be part of that opportunity and engage with us. It's not necessarily volume based, but it's more of a, it's going to help us manage our exposures and our risk and still make the transaction cost effective versus us passing on it. Or, maybe another financial institution deems a $10 million program too small, and we deem it acceptable because we're dealing with a middle market company with sales ranging from, 25 to $50 million, and 10 million to them is a huge, lift in liquidity if you're going to buy those receivables off their books. So that's a way to partner with banks like Anna to be able to go ahead and have them benefit from those open account structures at a much smaller scale.
And as Emmy said, you have a seat in the room, networking with the BAFT bank members, the key lenders that are supporting the region today or expanding into the region. This is the kind of discussion you would have and the value add that BAFT brings by having this type of network, which, by the way, on the supply chain aspect, I think we'll add some commentary here from John Paul, who basically knows a little bit about how we strengthen our ability to reach the supply chain in Latin America. So my question directly to you on this one, JP, because I know you've worked a lot in this area, is how is trade finance strengthening Latin America's role and the Caribbean's role in global supply chains? And I think that kind of completes the session from the perspective of how we've gone from that traditional correspondent banking, as Emmy was saying, partnerships, being able to support deals where we can actually work with a bank that might have that client, that access, that supply chain, and then partnering up. And so these discussions are kind of the things that we want to continue to talk about. So how do you feel overall supply chains are strengthening the reach into Latin America?
Yes, and before I jump into that question, if I can chime in and complement Emmy into the question that was posted. Banks, obviously, local banks play a major role because they have the local market knowledge, but also let's not forget that LATAM is also a cradle of fintech. So whenever you're talking about how can I go into a country where obviously I don't have the scale to go directly, there's roughly 3,000 fintechs or startups operating across 26 countries in Latin America. Largest concentrations, obviously, Brazil, you have Mexico, Colombia, Chile, and Argentina. But these type of fintechs today are offering, outside the alternative financing models, but they're offering you marketplaces that you could go in and obviously take a piece of that big supply chain finance pool or ecosystem and try to do business within your own client base that is operating in this country. So fintechs, and Emmy said it, Nestor said it, the alliances, the partnerships that we continue to put in the forefront of the innovation and expansion strategies will also remain key on how do we obviously educate better also within the Latin America risk aspect, but also how can we get a seat on the table within this larger, broader market of factoring or supply chain finance. When we look about, yes.
No, I was going to say, if you could chime in this question, it just came in, an anonymous attendee, but on that note, if you can chime in on that particular topic, I think it relates to this question that you're answering, is that how Latin American banks work closely with global commodities companies. How can they leverage this to develop, let's say, their corresponding bank relationships? If you can share a little bit of that.
Yes, indeed. Well, I think it's a beautiful connectivity because LATAM, it is a commodity-driven economy, right? So definitely commodity brokers play a key role also of bankerization and promoting trade growth. All the big names that everyone knows here of commodities are operating in the region. And there is an ample set of solutions, of structures that today banks, global banks, local banks, and commodity brokers can partner up in order to foster these type of trade transactions and support not only the banks, but the clients of the local banks. That obviously, that segment that is increasing their presence in each of the countries that we've been discussing. So the commodity brokers, they have those flows. They have those soybeans exports. They have everything that is related to the flows, which many times it is a challenge trying to find the right underlying transactions where global banks can feel comfortable financing.
Yes, yes.
The entrance, the alliance with a commodity broker gives you that also mindset of risk, a proper, responsible portfolio management, and you are able to go into the country and support those transactions for the better of all the parties, all the stakeholders involved. So they're a key player, key component into the growth of trade within Latin America, considering the natural commodity-driven economies that we hold.
Thank you. I wanted a commentary from one of the questions from the audience about the role of entities such as the African Exim Bank, Afro-Exim Bank is called, and how they function to help banks that have been de-risked get access to corresponding bank relationships. So one of the things that I want to point out on this is that especially on the trade side, the trade facilitation programs for trade, particularly by the IDB and others, those do help with the ability to risk mitigate transactions. Let's say for some of the smaller banks that have a tougher time getting access. Also, some of the regional players like the Central American Bank for Economic Integration, they work with the local banks, but still, this is still a challenge in the region. And this question was brought in by Brian Gordon, who's one of our BAFT members from Commerce Bank. So this is something that we continue to strive to see how we can support more of that de-risk segment. But I do want to say that BAFT in particular has done a very nice job, particularly here in the U.S. with banks in the second and third tier levels, maintain access by way of having the regional scope of regional banks within BAFT to be able to transact. So I want to commend BAFT for doing that, because one of the questions that came in here also from one of our members from HSBC, Tom Ripstein, was outside of what we're discussing here. How does BAFT, how can we bring the Latin America financial community more together? And if you can opine on this, Emmy, I think it'll be great. You alluded to this earlier, that we have a seat on the table to have respondents and correspondents be able to meet and to discuss the reach into the smaller and what we call the second, third tier. How can the regional banks also that are BAFT members combine efforts to see how we can solve the connectivity that we mentioned earlier?
So, I mean, again, in connection, with trade, the regional players in the U.S., the regional players in Latin America, the Caribbean, and in other markets throughout the world, I think the key is always collaboration, right? Global practices, best practices domestically. I know one of our members is working on a RMA solution to allow us to be able to have better connectivity, because managing RMAs is something that is very, very challenging. It's very costly. So you have to minimize them to the ones that you have most activity with. And that also was part of the whole de-risking that, we all encountered several years ago. And in some cases, we're still encountering to a lesser extent. But I think, that connectivity, having, sessions like this, having, white papers and other things to allow us to come together and seeing what are the pain points, right? And that goes back to the partnership comment that I've made. And I know Jean-Paul and Nestor, they have boots on the ground. They know those markets, like no one else. I always learned a lot from them in these sessions and with all my partners. And I think that, coming together in things like this, or coming together, just in a relationship perspective, reaching out to that regional bank that is now opening, themselves in your particular region, and having the right discussion and collaborating is going to allow us to get to the next level.
So, real quick on that note, do you see these trends applying particularly in receivables and payables and inventory finance structures in LAC? Can you expand a little bit about how that ties in?
So, at least from our perspective and what we've seen, I think in the past, I would say 12 to 18 months, everybody's looking for cash. Everybody's looking to reduce risk. Everybody's looking to enhance liquidity. And we've been observing, not only doing short-term trade, but many corporates, even SMEs, are viewing, short-term trade as multi-year contracts. And they're asking us, hey, can you buy into the payment streams of those multi-year contracts? Because they're looking for the cash today. And they're saying, hey, this has been executed, but I don't want to wait, 90, 20 days, whatever the case may be. So we're coming in to, come up with innovative solutions, whether it's in the form of taking the risk ourselves, or it's in the form of getting some mitigation, working with an ECA, working with credit insurance, partnering with other financial institutions to allow us to bifurcate, those payments. And I think as we continue to focus on the working capital initiatives and they continue to remain a priority, the unlocking of liquidity outside of traditional credit is now becoming complementary instead of competitive. Before, the relationship managers that were managing these relationships felt that we were cannibalizing the receivables. Now they're seeing, wait a second, you're actually enhancing the position of my clients, and ultimately we also enhance our position as a bank, because we're all managing our balance sheets in a number of different ways. So I think when we do that, we're seeing the importance of going back to, and I'm dating myself, cash is king. And right now, with everything that's going on with tariffs and reshoring, onshoring, and changes in supply chain, cash continues to be king. And these innovative solutions is what's bringing those opportunities to the forefront. So I think that the partnerships, not only in Latin America, but globally, are important to all banks, including regional banks in the U.S.
Thank you so much for sharing that with us, Amy. So I'm going to go right into the next section here, talking about some of the region, how to help the region get access, right? Especially trade finance. So I know the multilaterals play a big role. So Catherine, can we address the next question to the audience, please? And this question in particular is, what has been the primary purpose of your engagement with multilateral organizations? Is it to access long-term financing, technical assistance, risk mitigation or guarantees, policy dialogue or regulatory support, or we have not engaged with them? This particular question addresses, how to be able to expand the reach. And I do believe that in Latin America, the multilaterals have played a role, but also there's some observations that we'll share with the team. So let's see what the results are. Okay, so risk mitigation and guarantees. Well, how about that? That was not a surprise. So Nestor, elaborate on this response. Are you surprised at all?
Not at all. Not at all. I mean, is the reality is one of the great benefits that you get from the multilateral agencies. It's part of their mission, and obviously Latin American financial services companies, same as global financial services companies, tapping into those risk mitigation tools is critical. It's important. Everything comes at a cost, so it's like it's one of the tools. So taking again Emmy's words, and she puts in a very nice way, it's a toolkit, right? So you have a tool which is the multilaterals. You can have credit risk insurance. You can have risk distribution. So you can originate your assets and sell them to a third party that is interested in the transaction. So it's one of the solutions. It's very positive and it's very good. They have the mandate to support intra-regional flows, global flows as well. So for Latin American banks, I think it is a good tool as they expand within the region. I also think that it is also very important, perhaps, to have the BAFT connecting with the local banking associations to allow second, third tier banks to come together. Probably, I don't know if it's as a club or as some other way for them to be able to tap into this, right? Because there's only a limited number of people that you can have to deal with these businesses. But we need to try to include everyone. And it's part of the regulators and these institutions like BAFT and others to try to bring as many participants possible to be able to benefit from these tools, because they're very useful.
Yeah, and I think Jean-Paul wanted to chime in on this one. Go ahead.
Yes, I would complement what Nestor is saying. When you look at from a sub-asset class perspective, right? The use and the facilitation, the partnerships that you can build with the multilaterals is truly very accretive to any business model. Even if you don't have a presence today in Latin America and you want to access simple traditional letters of credit, they have those type of facilitation programs that obviously one can give you access to each of these markets, can help support your clients, but also build on knowledge on your credit teams on how to work in these countries. Secondly, when you look, and we were going back to the commodity discussion, when you're looking on how to even more promote commodity flows or trade flows among countries, you can use the guarantees in the short term, either facilitating trade flows from the U.S. into LATAM, vice versa, which are today also traditional ways of engaging different asset classes. And finally, to the answer of the survey is long-term financing, and that drives to the ECA asset class. So how do you really feel secure of going into Colombia, Peru, Chile, Argentina, Brazil, and 15 years? Obviously, the component of the multilateral, it is a big risk management tool that will give you that comfortability, not only to your institution, but to the whole trade structure, for that to have that feasibility in order to be delivered. So it is a critical component of learning on how to partner with multilaterals, because they can promote this growth within the organization, but also within the region.
So Catherine, share the next question, because I think it answers a little bit of what, hey, this is a solution, but it's not always easy. So, so the question is, what are the main challenges of working with multilateral organizations? The lengthy approval processes, complex compliance requirements, limited flexibility in financing terms, lack of alignment and strategic priorities, and we have not faced any major challenges. So let's see what the results are. And then we'll go into our last session that we want to cover today on the credit risk insurance side. So lengthy approval processes and complex compliance requirements. I think we all kind of live a little bit of this in our own onboarding and in some of the processes, but no, it's to be expected. And but again, the rewards are, it's a good stepping stone to basically get in and hopefully get further financing and develop more of the capabilities to provide trade financing in your organization as a respondent. So I do want to go into this particular aspect of it, because credit risk insurance for risk mitigation is an option. And some of this is also done through risk participation. So I kind of wanted to ask Emmy, how's capital risk reserve relief looked at in your organization with respect to mitigating trade finance risk?
So for us, the funded risk participations is a great way to improve our return on risk-weighted assets. Taking assets off our books and freeing up capital. So that allows us to do more and be able to support our clients as we grow the business. So it's a win-win, right? As a regional, we do lean into credit risk insurance. We have a big book of business. It helps manage our credit exposure, manage our internal limits, allowing us to do more deals. And again, like I've said in in prior comments, it's a safety net, right? In cases where you have commercial and political risk, but like anything, the devil's in the detail. Unfortunately, credit risk insurance for Fifth Third Bank, it doesn't move the needle on return on risk-weighted assets, right? And we do not get any capital relief as it relates to that. We do get capital relief with multilaterals. And one item that hasn't been mentioned here, because we talked about commodities, is the GSM 102 or the CCC program. And that also gives capital relief on the 98% that is guaranteed. So again, that's something that it helps promote exports. It supports, Latin America and the Caribbean and many other regions. And I think it also, connects us, with U.S. clients that want to do business in emerging markets, and they want to do it, safely, with a particular structure and longer tenors.
Thank you, Amy. And I just want to add a little bit on this to get to the next topic. But funded risk participations is a way to basically share or mitigate risk, if you will, but also unfunded risk participations through the Master Risk Participation Agreement at BAFT allows the network of banks to be able to facilitate these type of transactions. So that's another benefit of BAFT. By the way, some of the insurers chimed in, and it's true. It's part of our ecosystem. So credit risk insurance will apply in the U.S., but not necessarily uniformly the way, for example, credit risk insurance might be applied in Europe, where they do get capital relief. But that's another topic. But these are, again, as Emmy said earlier, the seat at the table that you get to find out what's the best solution to work with your institution with the lenders that are BAFT members. So you have a seat at the table, and we hope to see you at our annual conference so that you can have these type of discussions. So I want to get into the next topic because we're running a little bit over time, but we'll have some time for a Q&A, at least 10, 15 minutes. The last question is, ESG has been applied, but not consistently. And I would say some organizations more than others. But I want to highlight Emmy Reese's bank because they've been very consistent. And I will say that in our case, Beeks, speaking on behalf of my employer, they're very, very focused on this as a topic regionally as well. But it's not consistent. But we are still very committed to ESG. We look at our transactions and the way that we actually look at the business. It's still a very important topic for our institution. But Emmy, tell me about your situation. Fifth Third has been very committed in this area, and at least it's worth sharing this with the audience.
Sure. So we had a goal to achieve $8 billion worth of renewable energy financing. We have a very strong renewable energy team, and we've achieved that goal. And we set our sights pretty high in 2022 to provide over $100 billion in environmental sustainable financing by 2030. So far, we've reached about 37.6 billion, both in environmental and social eligibility criteria. And for us, at the bank in 2024, we celebrated 5 years of 100% renewable power and reduced energy usage by 45% across our 11-state footprint over the past decade. So it's really, really important to us as an organization and to our communities.
Thank you. So let's go into our Q&A right away. I think this idea of how can smaller and medium-sized banks in the region collaborate more proactive to exchange RMAs. We discussed that BAFT could be a good sounding board through our regional bank group. We have a council dedicated to some of these topics that we address here within the regional banks in the U.S. So that's something we invite you to do when you do meet at BAFT and meet with our members. Or become a member. One of the areas of benefit here is one of the questions mentioned earlier again was what is BAFT and other organizations doing to bring the Latin American financial community more together? And I would say, traditionally everybody, they usually attend the Felabon conference, which has been great. We meet a lot of the correspondent banks or respondent banks that meet there. But the difference in what we're doing in the outreach today is that the main lenders and the most active trade finance banks in the region are BAFT members. In fact, many of the BAFT members are also in country, some of the global banks and some of the main players that are actually doing trade finance in the region. So we welcome you, as said earlier by Emmy, you have a seat at the table to have these discussions where respondents and correspondents have the ability to work towards these solutions. So that's one way to answer that. Let's see. One of the questions I have here for one of you, if you'd like to take this, is from Jose Mendez. He says, one of the issues that I've run into doing business with U.S. banks is the minimum business they require from you, and in certain products, it's not, is large enough that it would keep you from having more partner banks. And that's an interesting question. So that means if you're a smaller player, you only have so much reciprocity to go around, right? So Emmy, I think you alluded this earlier as to you have to change the mindset, but can you elaborate a little bit? Because the question really is, how do these smaller sized banks, have the ability to work with U.S. banks, but not be limited by the fact that they can't provide the reciprocity? The
Right.
limits basically on those relationships.
So that goes hand in hand with, how are you differentiating yourself in your particular region? What do you have to offer to the U.S. correspondent besides the widgets, right? Besides the number of payments that you process and things of that nature. So, again, do you have an expertise in FX? Do you have an expertise in a particular type of industry that is of interest to that particular correspondent bank? Some banks are looking for clients that are in the renewable energies. Some banks are looking for clients that have investments in the U.S. and they want to do some infrastructural transactions in the U.S. And we can come in and partner with various banks, to do these public activity bonds. Is there a way that we can go ahead and partner that you don't become a number of, amounts of LCs or, FX transactions you're processing, but you're offering something else that we can then have a strategic partnership and grow as two financial institutions trying to have a foothold in either the U.S. and or Latin America or globally, and allow us to enhance that relationship. And that's where you move away from what can you give me, deposits, cash, and how can we do something differently? So to me, it goes back to, it's a long way of saying it's a change in mindset, and everybody has to be on the same page in order for us to drive that mindset together.
Thank you. By the way, there was a question really more in the chat. It came from someone just from talking about latest advice on FinCEN on some Mexican institutions that were named as being principally concerning with respect to money laundering. I just want to say that, at least on this topic, from a BAFT perspective, the front line of defense of the banks that actually do business in the region, I would assure you that most of these banks will do not only due diligence, enhanced due diligence, but also dynamic due diligence. So concerns like these, certainly with the U.S. banks, is always addressed, and BAFT is certainly one of the key leaders in the aspect of best practices and sharing best practice to ensure that we can combat money laundering. So that's one aspect. I did see some topics from insurers and some trade finance companies that, if you read the chats here, I would say that they're willing to also support the region. But again, the key question is, and I kind of leave this question and go back to inclusion, Nestor, which is, it's been really tough. Again, that question I mentioned earlier for small banks to gain corresponding bank relationships. And one of the members alluded earlier, how do you get assistance? But the point here is they're asking because they always bring up that their trade finance volume is concerned because it's too small. And I think the mindset here is to change the inclusion and say, well, how can we partner? What's the value add? What is the unique proposition that you can bring? Can you add a little bit to that? Because I think that's one of the ways that we can deal more one-on-one with some institutions so that we could include them in the supply chain. So can you elaborate?
Of course. Yeah. Well, the way that I would say is thinking outside the box, right? So if your asset volume in trade is low, so that means that for you to attract the attention of a correspondent bank is not there because you have a portfolio that's perhaps small. I think that having a broader conversation in terms of this is the business that I do, these are the sectors that are key for me as a local bank, that may create a different opportunity. And I think that also comes from the point of, again, global banks changing the structure, the way that they are seeing and having the relationships with the banks. So it is not anymore the bank that would tell you, do you need a trade line? I'll give you a trade line. And you open an account with me, you pay, you process your payments through me. It's a different way, right? So For instance, if you have a second, third tier bank in Guatemala that covers a sugar producer, that sugar could go to, as Jean Paul mentioned before, a commodity trader in the US or in Europe that is interested in that flow. So how about the global bank has the relationship with the commodity trader that is the buyer? You have the relationship with the exporter or producer. Can we do a prepayment? Rather than a traditional form of financing, can you do something else where you know who the producer is, you're comfortable with that? Let's partner up. You know your risk, you know that. I know this relationship here, I can bring them together. So it is an invitation to perhaps expand the conversation and understand the cycle of business for the banks and for the global banks and see where they can come together. That's my
And I will conclude with that because, again, we've seen a perspective from a global bank, a national U.S. bank, a regional bank that are active in the region. Okay, we're looking at solutions to provide not only expanding the supply chain, but ensuring that we capture the maximum of the supply chain and again, the aspect of financial inclusion. So I will end with this. You need to have a seat at the table. You need to be part of this discussion with BAFT, with our members, with our network. We certainly make that available to you. And I will now allow Belkis Lopez to conclude because, again, one of the aspects of our value-added proposition at BAFT is the training of our future leaders, the type of white papers that would allow you to manage expectations, know what the requirements are to maintain and really defend your correspondent bank relationships. But at the same time, our certification programs and aspects of where we can include Latin America as an outreach and have it as a key region of focus within the councils that we have globally today at BAFT. So Belkis, if you don't mind, we have about 3 minutes to end the session. I want to thank everyone and our panelists for the wonderful job today. Also, Catherine Koch, Matthew Katz, the BAFT staff that's been supporting behind the scenes here. Great job. Belkis, thank you for also your help and also initiating the training outreach that we have with the region.
Thank you, John, and thank you, everyone. Excellent conversation. I just wanted to point out that the recording of this webinar will be available via our BAFT YouTube channel. And just to close it off, I mean, I think as we continue building in financial institutions, strengthening the strategy, I mean, we encourage the next step in professional development through BAFT industry recognized certificate programs. This includes the Certificate in Trade Finance Compliance, the Certified Transaction in Banking Professional, and 3 other excellent certificates that we have to offer. You can go to baft.org/education for more information. And just to close it off, because I mean, I know people have to go back to work. On behalf of BAFT, thank you to our panelists, John, excellent moderator, and all participants across 22 countries for being part of today's global conversation. We look forward to staying connected through webinars like this one that are so key to the industry and to the region. So until next time, thank you so much.
Hope to see you at a BAFT event. Take care.
Thank you. Thank you so
you.
much. You take care. Bye-bye.
Bye.
Thank you. Bye-bye.